Once you're over 40, it's only natural to start looking ahead. You find yourself wondering, have I actually put enough aside? You've put in years of hard work to get where you are today. You've done the right thing. You've put money aside regularly and been sensible with your finances. And yet, there's that nagging feeling, isn't there, that it might not be quite enough. If the bulk of your saving is currently tucked away in cash deposits, standard savings, or fixed-rate accounts, this video is for you. Because the issue was never your discipline, it's simply that your money has been left in the slow lane. I speak to so many people in their 40s who tell me the exact same thing. I've been putting money aside for 20 years, so why does everything still feel so incredibly expensive? The cost of living is soaring. The property market has gone through the roof. And retirement, well, that still feels like a bit of a question mark. Look, you haven't put a foot wrong. You've worked hard, you've saved, and you've played it safe. But there is a silent force working against those who keep their money in the bank. And it's time we talked about it. In simple terms, inflation means the money in your pocket buys less every single year. At just 3% inflation, your money loses nearly half its value over 20 years. If that creeps up to 5%, you're left with barely a third of your original spending power. We've all seen it lately, those double-digit inflation following the pandemic. The uncomfortable truth is this: when your bank interest is lower than inflation, your wealth is actually shrinking, even if the balance on your statement looks bigger. Cash feels safe, but in reality, it's a silent drain on your future. It's a frustrating reality many face. You've put in the hard work for 15, maybe 20 years, yet that sense of security still feels out of reach. You feel behind, and you aren't imagining it. Open any newspaper today and the headlines are the same. Inflation continues to eat into the nation's savings. We are seeing the real-world impact of the money losing its value. See, cash has one job: to protect your money. But it was never meant to grow your wealth. Saving alone was designed to keep your money safe, like a shield, not to act as an engine. You've been running as hard as you can, but you've been running on the wrong road. Now, let's touch on something that, quite frankly, most of us over 40 were just left to figure out for ourselves. Let's understand, what is equity investment? Think of it this way: when you invest, you're moving from being a consumer to being an owner. You aren't just buying an iPhone or using Amazon, you're taking a stake in the companies themselves. Whether it's tech leaders, pharmaceutical pioneers, or energy firms, these businesses are designed to grow. As the world economy moves forward, these companies lead the way. By owning a slice of them, your wealth isn't just sitting in a bank, it's working in the real world, growing alongside the very brands that shape our lives. As they innovate and their profits rise over time, you, as a shareholder, are quite literally taking your seat at the table and sharing in that success. Let's look at the S&P 500. Essentially, this is a collection of the 500 largest, most successful companies in the United States. It is, quite simply, a powerhouse of global commerce. Now, consider what those companies have endured. They've survived world wars, deep recessions, and global financial crashes, and yet, over the decades, they haven't just survived, they've grown. Historically, this index has delivered an average return of around 10% a year. Even when you account for inflation, you're looking at a real-term growth of 6 to 7%. It isn't a smooth ride, there will always be bumps in the road, but the long-term direction has been consistently upward. And the best part, you don't need a crystal ball. You don't need to spend your weekends picking individual stocks or trying to outsmart the market. You just need to participate in the growth of the world's biggest winners. Let's look at two people, both starting with the exact same goal. Every month, they each save $500. Fast forward 20 years, and they both put in $120,000 of their hard-earned money. The first person plays it safe. They keep it in a standard cash account at 3%. After 2 decades, they have $164,151. Not bad, you might think. But the second person takes a different path. They invest that same $500 in an S&P 500 index fund, averaging a 10% return. Their final balance, $379,684. Same money, same discipline, but a life-changing difference of over $200,000. This is why your savings have never felt like enough, even though you did everything right. You weren't lacking discipline, you were just on the wrong track. Let me be absolutely clear about this: being over 40 is not some sort of financial finishing line. Far from it. If you're in your 40s now, you likely have another 20 or even 25 years of earning ahead of you. That is a massive window for your money to grow. Many of the most successful investors I know didn't truly get their house in order until they hit 40. The biggest mistake you could make right now is to look back, feel a bit of regret, and think, I've missed the boat, so why bother? You haven't missed it. As the old proverb goes, the best time to plant a tree was 20 years ago. The second best time is right now. So, how do we actually begin? The most prudent path is through index funds, often called tracker funds. These allow you to own a slice of the entire market rather than betting on a single stock. The key is to move gradually. Instead of moving all your capital at once, you invest your money systematically month by month. This is what we call dollar cost averaging, and it smooths out the bumps in the road. Of course, you must keep your rainy day fund, your emergency cash, exactly where it is, safe and accessible in the bank. We're playing the long game here, looking 10 or 20 years down the line. This isn't about taking a reckless risk, it's about taking a calculated, necessary step to ensure your future stays on track. If you're in your 40s and you're still with me, please know, you are not late. You are simply at the start of the next chapter of your financial life. You've already mastered the hard part, the discipline of putting money aside. Now, it's time to let that money work every bit as hard as you did to earn it. Think of it this way, cash is there to protect your past. But it's equity that builds your future. If you found this useful, please do hit the like button and subscribe for more. In the next video, I'll be walking you through exactly how to move your money from cash to equities, safely, and the essential checklist you'll need to tick off before you start.